Have you ever watched price move exactly the way you predicted right after you exited? I used to feel that sting every week. The turning point came the day I stopped winging it and built a real trading strategy, one I could explain, test, and repeat. In this video, I'll show you step by step what a trading strategy actually is, the few parts it must include, how to avoid the most common mistakes, and then we will build a simple, testable strategy together. By the end, you will walk away with a one-page checklist and a clear template to create your own rules. Let's define it cleanly. A trading strategy is a rule based plan for when to enter, manage, and exit trades, plus how much to risk under specific market conditions. It's not a hunch, not a Twitter thread, and not buy because I feel it. Think of it like a recipe. Ingredients are your tools, indicators, price action patterns, market session, risk per trade, and so on. The method is your if then logic. If A and B happen, then I do C. The measurement is your validation. Does this recipe actually produce wins more than losses over enough samples to matter? Every strategy lives inside a context, trending or ranging, high or low volatility, and specific sessions. Define where your rules apply. A trend following recipe in a choppy range is like snow tires on a summer track. It's a wrong context. Entries are objective. If the 50 period moving average is above the 200, price retests the 50 and a bullish engulfing candle closes, enter long. That's a measurable and repeatable. Choose one primary trigger and one confirmation. More filters do not always mean better results. Often they mean fewer trades and less learning. Risk is the heartbeat. Many profitable ideas still fail because position size is random. Pick a fixed person per trade, say 0.5% to 1% of your account. If your stop is 40 pips, your lot size shrinks. If your stop is 20 pips, it grows. Same risk, different size. That keeps you alive. Decide before entry. Do you move your stop to break even after price moves one reward? Do you partial take profits at one reward or two rewards? Will you trade behind structure or a moving average? Management is where emotions hijack results. Your rules keep you calm. Your exit defines how much you keep when you're right and how much you lose when you're wrong. Your stop loss should be placed beyond a level where you are sure the market would prove you're wrong, not just randomly below a candle's low. Usually, that means beyond a liquidity level, a place where the market has taken out previous highs and lows. This makes sure that if price truly reaches your stop, the market has changed direction, not just created a quick fake out. For take profit, it's usually better to keep them solid and logical, at the structure points or defined R multiples. Let the market move freely in your preferred direction. Don't grab profits too soon. Remember, your stop protects you from loss. Your target lets you edge breathe. Now, validate. Start with visual backtesting on a clean chart. Scroll left, mark signals bar by bar, log results. Then do a small sample forward test in demo or tiny size live. Record every trade, data, instrument, setup, screenshots, or multiple, and what you felt. The goal isn't perfection, it's evidence. Three traps. First, indicator soup. Five indicators agreeing once a week. No learning occurs. Second, moving targets. Changing rules after every loss. Lock the rules for a fixed sample, say 50 trades, then review. Third, risk creep. Doubling size after a win, halving after a loss. Keep risk fixed. Let the edge show itself. Let's build a simple trend pullback strategy you can test today. We will keep it minimal and structured. Step A. Time frame 1 hour. Instruments 2 or 3 measures you know well. Context filter 50 EMA, about 200 EMA for a long bias. ATR 14, about its 3 months median to avoid ultra low volatility days. Step B. Trigger after the 50 EMA is above 200 EMA condition. Wait for price to pull back to within 1 ATR of the 50 EMA. The confirmation is a bullish engulfing candle that closes above the 50 EMA. The entry is market buy on close of the confirmation candle. Step C. Stop. Place it beyond the nearest liquidity level. For example, below the last swing low that clearly took liquidity. That's the point where your idea is invalidated. The risk fixed 0.75% per trade. Target, first target at 2R. Take 50% off there. For the remainder, trail below swing lows or a 20 EMA. If price closes below the 20 EMA, exit. Step D. If price moves 1R in your favor, move stop to break even. If price nearly tags 2R and reverses, no change. Let rules play out. No adding to the position. One trade per signal block. Step E. For each trade, log date and time, pair, screenshot at entry, reason for entry, 2 lines maximum, and stop distance, position size, exit reason, R result, emotion tag like you are calm, anxious, or overconfident, and a non-line improvement note. Okay, traders, I want to introduce you our sales page on MQL5 where we sell high quality products on MetaTrader 5 language. We have made some indicators like basic swing detector, smart squeeze, one of the most popular trading view indicators, basic order block and breaker block, and also a risk reward calculator, which you have seen before in this video. There are lots of information about these products that you can find them, and you can buy these products easily. So if you don't know how to download this product, you can watch the above video. So, what is a trading strategy? It's your if then recipe for context, entries, risk, management, and exits. Validated by evidence, not vibes. Today, you saw the blueprint and we built a complete testable plan together. If you commit to 30 or 50 trades with this exact checklist and no drift, you will know with data whether it fits you. Tweak one variable at a time, retest, and stay humble. The goal isn't to win every trade, it's to execute a good plan over and over. If this helped, drop a comment with your market and time frame, and I'll suggest a context filter tailored to you. All right, traders, that wraps up today's video. Now you know exactly what a trading strategy really is and how to build one that fits you. Remember, trading isn't about guessing where price will go next. It's about having a clear set of rules and following them with discipline. If you found this video helpful, make sure to like, subscribe, and turn on the notification bell because we've got more deep dive videos coming, each one designed to take you a step closer to trading mastery.